Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the international bond sell-off is intensifying, although equity holders seem to be ignoring the implications. But first in the US, retail sales grew strongly last week, even if it was off a low year-ago base. But they are above equivalent 2019 levels, even accounting for inflation. Also rising strongly was March factory activity in the Richmond Fed District and putting the weaker February result behind it. At these levels, it's well above pre-pandemic. New orders, shipments and employment all rose notably. Price pressure, while still high, is easing there. And Canadian producer prices jumped 3.1% in February from January, the sixth consecutive increase, and the largest monthly gain in more than 40 years. The rise year on year was 16.5%, so this recent monthly rise is an acceleration. We had missed it earlier in the month, but the latest tax cut in China of 2.5 trillion yuan adds to 4 earlier big efforts, and all up, they almost total 10 trillion yuan in tax cuts there. And staying in China, the echoes of their property developer meltdowns build across the sector. Banks have unexpectedly taken control of almost $3 billion held by Evergrande's key subsidiaries, as the embattled property developer said that neither it nor its main listed units could meet their imminent deadline to publish their annual results. This is a company that has more than $30 billion in offshore debt. And there are echoes in Japan too, but theirs are after last week's earthquake. Authorities there are scrambling to prevent power outages in major cities like Tokyo. In Australia, consumer sentiment is falling hard. The ANZ survey shows that it is at its lowest level since September 2020. Fast rising inflation, especially for petrol, is denting confidence, even though their labour market is strong. The weakness in consumer confidence presents a growing near-term risk to the outlook for consumer spending. The US Treasury 10-year yield opens today at 2.38% and up another sharp 8 basis points from this time yesterday. And the price of gold starts today at $1,920 an ounce, and that's down $12 from this time yesterday. And oil prices, little change in the US, still at just $108 a barrel, but the international Brent price is up 50 cents to just on $112 a barrel. And the Kiwi dollar will open today much firmer, now at just on 69.4 US cents and up more than half a cent since this time yesterday. In fact, our currency has appreciated 3.8% since the start of the month, and that's a lot. Against the Australian dollar, we're up a half a cent too at 93.5 Australian cents. Against the euro, we're up a half a cent to 63.1 euro cents. That all means our trade-weighted index starts today at just on 74.7 and a new 4-month high. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.